So I'm going to start with a simple observation I think we all understand. To survive, everyone must convert their work into assets that are scarce, desirable, portable, durable, and maintainable. If you're a living creature, you're converting your work into organic energy. We call it fat. Fat's the most scarce, desirable, portable, durable, maintainable asset in the organic world. It might have been demonized, but if you can't generate fat, you're a type 1 diabetic. Life is going to be short and brutal and difficult. You really need to be able to store energy. Now, if you're an individual, a company, a family, a government, you have the same exact challenge. Now, we all know Bitcoin is the best asset. You agree? And there is no second best asset.
In today's video, Michael Saylor talks about Bitcoin's role as a new asset class within a global monetary system, and how Bitcoin will change everything we know about money. He also talks about why Bitcoin is important for individuals, families, and big companies, and how they will benefit the Bitcoin network to skyrocket. Wait a minute, everyone. Welcome to Bitcoinzilla, your platform for daily cryptocurrency analysis and news. Our mission is to keep it simple. Bitcoinzilla offers engaging information that is easy to understand. Our analysts keep their eyes on the latest news to provide valuable insights via email. Don't miss out on this opportunity. Join our community of 10,000 subscribers and experience the new edge with Bitcoinzilla. Subscribe now.
The real point of this discussion is to talk about what Bitcoin means to the rest of the world. Bitcoin's going to have many types of participants in the future. You know, one set of participants, one set of people that are going to be plugged into the Bitcoin network are clearly individuals. There are 8 billion individuals on the planet. What are individuals going to contribute to the Bitcoin network? Right? The individuals bring creativity, they bring clarity, they bring conviction, they bring capability, they bring the conscience to the world. And of course, they are going to hodl. They're going to hold Bitcoin for life, right? Now, how many? Lots, right? Right now, there are hundreds of millions of individuals that have an interest in Bitcoin one way, shape, or the other. It's going to be billions. It's going to continue to grow. And a lot of times, a lot of our education is really focused on the individual. But I think that we can't stop with the individual, because these individuals form groups, families, corporations, governments. They perform nonprofits. They form clubs, churches. There are a lot of ways that individual creativity and aspiration manifests itself. And of course, one of my favorites is families. There's a billion families, about a billion families. And why do families matter? They're the future of humanity. That's why they matter, right? Families bring the compassion, they bring the community, they bring continuity, they bring joy, they bring hope. And a family is just a much more powerful unit than just an individual. Families will hodl. And we're starting to think about families now and how they join the network. But there's a third organization, third type of group, an investment company. This is a set of organizations have not been involved in Bitcoin much for the first 15 years of its existence. But investment companies can be they can be mutual funds, they can be trust funds, they can be exchange-traded funds, these ETFs, they can be hedge funds, and they have not trillions, but probably $100 trillion worth of assets floating out there, and they get to decide how those assets will be disposed of and how they'll be situated, and they are actually acting on behalf of families and on behalf of individuals. So, on one hand, you can't write them off when they can decide to reallocate $10 billion from gold to Bitcoin on behalf of 18 million retirees that used to work for the Postal Service, right? And when they make that decision, they're making that decision that impacts families and impacts individuals, but they're also making the decision as a fiduciary. And the last 36 days have been an illustration of how important these kind of companies are, because every day in the market, they're buying hundreds of millions of dollars of Bitcoin. They're trading it, and they're building up billion-dollar positions. This has just started. We're 36 days into a massive adoption of just these exchange-traded funds, but it's going to just keep going, and they're going to ripple all through the world, through all sorts of economies, and they will have a profound impact, and in my opinion, a profound impact for good. It used to be, if you go back to 2018 in the Bitcoin community, if you said Larry Fink, they would say, oh, Larry Fink doesn't like us. And in the year 2024, Larry Fink goes on television and speaks to leaders in the world and says Bitcoin is a store of value. It protects the sovereignty of the individual. It allows you to achieve your hopes. It is hope. Larry Fink has said Bitcoin is hope. Now, what does that say to me? It says we don't have enemies. What we have are people that need Bitcoin that don't yet know why they should be our friend.
Industry experts are concerned the upcoming Bitcoin halving could lead to increased centralization. The fear is the reduction in block rewards will make older mining equipment unprofitable, concentrating hashing power in the hands of fewer miners. A trend toward mining pool centralization on the Bitcoin network has been clearly observable over the past few years, but the halving is expected to further exacerbate the issue and accelerate the trend. Historical data gleaned from BTC.com shows that from 2016 to 2021, on any given 3-day period, the top 2 mining pools controlled around 30 to 40% of the hash rate. Hashing power is far more centralized lately. On February 28, the top 2 mining pools, Foundry USA and Antpool, controlled almost 50% of the network's hashing power, according to Coindance. The halving will lead to hash rate volatility, as miners facing higher operating costs and outdated setups will go offline. This will further centralize hash rate, with large-scale mining pools operating with significantly lower marginal cost per hash rate, thus intensifying centralization concerns.
When someone goes on television and they're asked, what do you think about Bitcoin, and they get poked and they're a little bit irritated, they got to ask the question. They're not an enemy of Bitcoin, they're just not prepared for the question. And in fact, over time, the journalist will do the poking because they know the most important thing in the world today is Bitcoin. And you're going to have a group of people that understand it, that will say it's the future. And you'll have a group of people that don't understand it, and they will not have embraced it. But at the end of the day, with time, with education, we're going to see more and more people join the network, and they're going to participate. Now, those investment companies aren't the only type of companies. There are operating companies. And by the way, how many? If you do a quick Google search, 333 million is the count on Google of companies in the world. Think about that for a second. 333 million. There's a lot of companies, and all of these individuals and all of these families, they all act through corporate entities. Oftentimes, you'll see a group of 5 or 6 or 10 or 50 or 500 or 5,000 or 50,000.
While the halving of block rewards may make mining less profitable, some scenarios could offset the reduction in income. The simplest of these scenarios would be if the price of Bitcoin doubled against the US dollar. That may be too much to hope for, but there are other potential avenues for pursuing increased returns. As Acheron Trading CEO Laurent Bennion told, miners already have more than one way to make a profit. Miners' compensation consists of 2 parts: newly minted BTC, as well as fees offered by the users of the network, featuring an auction mechanism for transaction processing priority. The halving of block rewards could shrink miners' profitability and put a fatal strain on less efficient mining operations, leading to more centralization, as had been the case in the past. Yet the recent network congestion stemming from the ordinal's innovation has led to an increase in network fees. Bennion believes ordinals could actually prove beneficial, since it is possible that the decrease in miners' comp from the halving will be compensated by the increase in comp from higher fees. And while the increase in fees alone might not be enough to make up the shortfall, the slowing of the supply inflation could further compensate miners in dollar terms. And do not forget to subscribe to Bitcoin Zella. The most important news will reach your inbox on a daily basis and for free. Not know why you haven't subscribed yet? If you liked the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.